Hey TikTok, Jim Malone here. I'm also broadcasting on YouTube and Periscope for everybody out there. Kind of an interesting day today. We're going to look into a interesting new ETF for Bitcoin. And I don't know if you know this, but Bitcoin, every 4 years, what happens is they cut the number of Bitcoins in half, and that has in the past made Bitcoin go higher. So kind of an interesting thing that is gonna happen with Bitcoin. So let's see if we can get into that. Um, and I just want to show you this on the screen. This is a new fund that today, just going over today's market. Um, it has been going up, but then it's reversed and it's gone down. So right now it's down. The market is down. At the beginning of the day, it started up. So we're really in a very, very volatile market. Starts out up, goes down. It's a strange thing. Um, the new Bitcoin ETF that I want to talk to you about has the symbol GBTC. Currently, it's trading for about $11.47. It's up 7.9% today, just today, up 84 cents. This is a very interesting way to play the Bitcoin market. You don't have to go into the Bitcoin market directly and risk potential loss there with illiquidity. This kind of gives the Bitcoin market something to sort of hold on to a little bit, which is really, really interesting. So I just wanted to put this out there. The symbol of this ETF is GBTC, and it trades. It's been trading very well. As a matter of fact, we've been seeing a lot of movement into it. This might be an alternative if because I do think that eventually, though right not now, we're going to see some inflation in the market. But right now, we're not seeing inflation. The Fed has been putting a lot of liquidity into the market, and that's kind of a weird thing. So Bitcoins have been a little bit hard to deal with because it's hard to buy and sell it. The ETF, the Bitcoin ETF, gives you that capability, and it's just starting out. So the price is right, 11.47, and you can do all kinds of things. If you have an ETF, you can short an ETF, you can sell options on it. So something that is very, I think, would be a lot of interest. I'm going to be looking more into this as time goes forward. This is the Grayscale Bitcoin Trust, and it's a open-ended grantor trust based on the U.S. Based in the U.S. and it tracks the Bitcoin price. So something you want to take a look at. GBTC is the symbol, and it's now trading for $11.47 when this slide was taken. So I want to show you some other very, very interesting stocks. The market, I believe, is going to be headed down, but there are some stocks that are basically just doing great, and it's really interesting as we see the market move from a physical market to more of a network-based internet market. I mean, it's really accelerating. A lot of the stocks like Marriott, MAR, that have a lot of hotels, they're going to do very badly in this new market. But some other stocks like Datadog is going to do very, very well. This thing gapped up yesterday. It's trading at 70.22. Hopefully it'll come off a little bit on this, but I think, this has had what they call the 8-week hold rule, which means that if a stock gaps up like this, then you don't want to sell it, because typically when you're selling stock, if something goes up 20%, you want to sell it or probably take profits. But if it does that within 8 weeks, eight weeks, then you want to hold on to it. So if this thing moves back down to about the 60 to 63 point, that's an entry point. But this is definitely one you want to watch list. So I've put that up here, and you can see this is just a tremendous chart. And this is a company called Datadog, and the symbol on that is DDOG. Now you got to be careful because there is another ETF out there called Dog. You don't want that one, but you know, this is interesting because Datadog. This is definitely one I think you want to watch list. As you can see, up 475%. So put this one in your watch list. I certainly have in my watch list. And this broke out after earnings. And of course, it's got a composite rating of 98, which means it's very, very good. As you can see, the relative strength line here, this little blue line here, is 97. This is outproducing all but 3% of the market. So it's definitely one you want to watch list. Number 2 on the list is a very interesting stock, Zynex, ZYXI. It's also a lot less expensive. This is number 1 in this group. Now, what does this company do? Well, this company builds data centers, primarily in Nevada, and they're doing extremely well. It's up 48 cents today, or 2.43%. Not a whole lot of volume. It's a relatively light stock, but if you want to be in the real estate market, I would recommend not being in most of the real estate market because I think it's going to be very challenged. But the data center part of the market, that's where you want to be, because as the economy goes more and more digital, the demand for data centers is going to continue to go up. There are other things out there like Digital Realty Trust, which are really great, but what you want are the ones that are really performing the best. This one's the number 1 in the group, and it's done extremely well. Its volume is up tremendously. I believe that you're going to see a lot of institutional buying on this one. So this is definitely one you want to put on your watch list at $20.20 a share, making it, fairly affordable. And it's got a nice, it's got nice movement on the stock. Again, a relative strength very, very high. This is the relative strength line, 98. So it's outproducing all but 2% of the market. So definitely one you want to put on your right list. But wait for the proper entry on this. I believe that the proper entry is going to be about at $17.50. You may or may not be able to catch it at that price, but if you do, that's going to be a good deal. The third one that I want to put on, and I think a lot of people know about Shopify. Shopify is just a great company. It's a Canadian-based firm, and basically, if you're going to move your game to the internet, and you're a small retailer, you want to definitely use Shopify because it's a great way to go. Now, it's a little bit expensive. I mean, $766.22 a share. I mean, that's in Tesla land in terms of expensive, but it's up $23 today, 3.22%. That's awesome. It is absolutely the very top of the market, 99% composite rating on this one, and it's number 1 in its group. And by the way, this is one of the best groups out there. As you can see, it just goes up. As a matter of fact, I didn't even have enough space on my chart to show how good this thing is. This thing is unbelievable. It's also in the top 2% because that's the relative strength line, 98. So this is another one you want to watch list or possibly buy, because I do believe that in the next few months, we're going to see Shopify even do better, because that's typically the way it is. The good get better, and the great get great. Now, another one in the healthcare space, the market is moving away from the cyclical stocks, the oils and those kind of stocks, and it's moving into tech, of course, we all know that, but it's also moving into healthcare. And this is the top ranked healthcare company right now that I want to show you. It's a relatively affordable stock at $61.44. It's up 6.23% just today, $3.59 up. That's pretty terrific. Also, look at this relative strength line. Again, extremely strong. A 98 on that, meaning this is in the top 2% of all stocks out there. As you can see, very strong buying pressure. A lot of volume up. It's 175%. That means that the volume is almost doubling on this. I do believe we're seeing a lot of institutional interest in the stock. So this is definitely one you want to look at. All right. So let's go to the next slide. There we go. Now, I want to concentrate on the stock of the day, and that's Roku. Everybody knows about Roku. Do you know that once Netflix and Roku were kind of together, but they spun off Roku? And Roku has become definitely the stock. I think Roku's model is going to be very successful in the near future. Why? Because I do believe not everyone is going to want to pay for, not everyone is going to want to pay. So Roku is in the online space. Netflix is number 1, Roku is number 2. Definitely something to take a look at. Here we go, market trader. Thanks for came in on Periscope. Powell is is not entertaining negative interest rates for now. Well, he's not, but here's the problem. Here's the problem that Powell has, and this is another question. The problem that Powell has is that we may have to have negative interest rates because we have deflation in the market. And that is what people do with deflation. Rather than let it go into a depression, which I think that might happen. You see, in the 1929s, we had the same kind of situation. We didn't do anything about the liquidity in the market, and that's what caused deflation. That's what caused the 1929 crash. So the reason why Japan took the drastic step of going to negative interest rates was because they didn't want to be in a depression. It makes a lot of sense. I think it really makes a lot of sense. So with Powell, I think that is definitely an issue. Obviously, they don't want to go to negative interest rates. That would be kind of saying that, hey, man, we do have a problem here, and it is not a good situation. So, at least for now. So what this means is, because we're not going to go to negative interest rates, I believe that the market will start to turn over and possibly fall, because I do believe it's going to have to test the low. And of course, we all know the low was made on March 23rd when the spider, the SPY, that's the symbol of the largest ETF, that's when it went down to 218, and that was the lowest that had gone. So I do think that the market is going to retest. It's just question is when. It's always the question is when, right? That's why you want to watch list some great stocks, and then you want to move. If you're gonna be in any part of the market part of the market you want to be in is in digital and in healthcare. That's really all where you want to be. All right, Hitachi. Let's see. Is it better to create a synthetic discount for Datadog, like sell puts or sell calls? Wow, that's a great question. I kind of on the more speculative stocks like Datadog, I kind of like to do that. I think that's a really good move, because buying the underlying stock when I'm not as sure about it and the volumes are not as good. See, that's what I'm looking for. When I'm shorting stocks, I want stocks that have very good volume, but I want that liquidity. I'm not as sure about Datadog, so I think that selling the puts might not be a bad strategy. Thank you for that. I really appreciate that. That's a tremendous insight on Datadog. I think Datadog is going to be really excellent, by the way. Let's see. David Topper says stock market is the second most overvalued ever. I agree. I think it is. I think it has been overvalued. But you know what? Here's the thing. Where can you go? Where can you go? Are you going to take money and invest in commercial real estate? I don't think so, because the world is changing and people aren't going to malls, and we have the coal economy shut down. So where is the real money going in the market? Well, the real money in the market is going into digital. It's going into things like Netflix. It's going into things like Microsoft. It's the normal, the usual suspects. Now, eventually that's going to turn over. So I'm not ultra long on that, but I do think it's overvalued. I do think the stock market's overvalued. But if you buy the stock market totally based on price to earnings ratio, you're going to end up buying dogs. You're going to end up buying things like ExxonMobil. As much as I like that stock, it's gone down. Why? It's got a great price to earnings ratio. As a matter of fact, some of the mining stocks that don't mine gold, they have great price to earnings ratio. But yet, you'll probably have lost money in those. If you want to look, so don't always look at a price to earnings ratio. And I do believe it's very overvalued. I do believe the market's overvalued. But the question is, if you're in the market and you have proper stop losses, you can make money in an overvalued market just as well as you can in an undervalued market. Okay, let's see. Take some calls from TikTok. I've been ignoring people on TikTok. That's a bad thing, because the people on TikTok have helped me out so much. 281 on the SPY, May 21st. Yeah, I think so. Well, here's the thing. I think the spider right now is basically, I originally thought there was going to be resistance on the spider at a level of 275. I was wrong. it went up higher than that. So now I think that, yeah, I think we are going to see a reversal. I do believe it's going to have to move, and part of the reason I'm not going to really get into, I don't have the charts for it, but because of Fibonacci retracement, I think it is going to move lower. But the question is when. I think, we're starting to see cracks, and I'm very short. I typically am 1 week in my trades, that kind of thing, 2 weeks in my trades maximum. I do think we're going to start to see it turn over, but not now. Not now. So there you go. I really like that. VTIQ. Let me see if I can. Let me see if that'll let me put that up there. Let me see if I can get a chart on VTIQ for you. All right. Let's see. Quotes. Real-time summary. Okay. Well, wait a minute. There we go. Let's see if I can. Let's see if I can put VTIQ in there. Well, yeah. Okay. Well, all right. I don't know if I can bring that one up. I definitely would like to. No, I don't think I can. Anyways, sorry about that. I will have to get that for next time. Let's see. New low at the end of the day. New low for the end of the day coming up before close. Yeah, I think so. I think we're going to see some definite moves towards the downside today, and I think you want to be closing your long positions. I know I did. I had a I still have a long position in Facebook, and I opened it yesterday, and I went in too high at 214. I sold a call. I have bought back that call, and I've sold another call for a week out. But I do believe that we are going to start to see a turn in the market. The market's been up for like 6 of the last 7 days, so I think we're going to see a little bit of a weakness, and I think that we might be seeing the beginning of it moving over. So we just, you just don't know. But I think that that's kind of where we're at. Do we take profits in? Oh man, I would take profit. Well, here's the thing. I love Microsoft long term, Hitachi. I love Microsoft long term, and I've been a holder, and I've been buying and selling it for the last 3 years. So I am very, very bullish on Microsoft. But if you have good profits in it, I would take half your position and sell it, just because I think that it's unsure where the next reentry is going to be on this. I think if you're there, you should definitely probably be taking some profit, but I'm not saying go out of the stock completely, because I do think that there may be some more upside for Microsoft. But I think that is terrific trade, by the way. Let's see. Do you think it's possible to test the lows if the techs keep holding up? On the first drop, they tanked. Well, here's the thing. I think that the market is going to test the lows, but the question is when. But it's a bifurcated market. It really is. It's a bifurcated market where the very, very good tech stocks are doing great. The big cap tech stocks are doing as best as I've ever seen them do. It's the cyclicals and the oils and those stocks that you have to watch out for. Those are the ones that are going to go lower, and so that's the thing. I wouldn't be totally out of this market, because I still think that there's a lot of movement of capital from from the Dow stocks, like the Boeings of the world, to the Nasdaq. That's where the techs live. And specifically into the Qs. Now, the QQQ is the Nasdaq 100 ETF. It's one of the largest ETFs next to the Spider, and that covers the top of the Nasdaq. The Nasdaq has been doing very well. Nasdaq stocks, I don't think they're necessarily going to go lower. The S&P 500 stocks a little bit more challenged, and I also think the Dow stocks are very challenged. So. You want to be long the Qs, QQQ. You want to be short the Diamond, DIA, and then you kind of want to be neutral on the Spider. So that's how I see it, at least for today. Let's see. Okay. Hey, what do you think of VTIQ? buy or hold. You know what? I'm trying to get some more information on BTIQ. My feed for some reason is not doing very well, so I'm trying to reduce the slides at this point. Take Broncos Microsoft. Yes, I would. Okay, so now let's see. Going to Periscope. Texas and Florida have no sales tax, so they lose a lot of revenue. So they need a lot of sales to make up money. Well, yeah, actually they do, but the difference is I'm originally from California, and they've got taxes on everything. They've got a high income tax. They've got a high sales tax. They've got a high property tax, unless you have a Proposition 13 house, which I'm very lucky to have. But for the most part, Texas and Florida are low tax states, and therefore they just don't spend as much money on their governments as do California, Illinois, New York. And because they have the lower cost of burden, they keep their taxes lower. It's just, now a lot of people don't like that because there's not as many government jobs in Texas. For instance, in California, 1 out of every 5 people work for some form of government entity, either that be federal or state. A lot of them work in the state. So there's just a lot of people that are on the government payroll in California, as well as Illinois and in New York. That's not necessarily the case in Texas. It's becoming more of the case, but currently it isn't. So if you have a choice and you can make the move, and that's not for everyone, I would recommend Texas. I really would, because it is one of the fastest growing states. And even with the problem with oil being a major component of the economy here, at least in Dallas, finance and tech are very big. So it's a good place to be. Anyways, no, I don't want to totally rah-rah for Texas, but I definitely am a transplant here, and it has worked out extremely well for me. I was able to buy a house, several houses actually, no money down. I don't know if you could do that right now, but it worked out extremely well for me. So, new entry point at about 170. Good question on Microsoft. Good question. I don't know. Let me get back to you on that maybe tomorrow. I'm going to put that on the list for ones that, for entry point on Microsoft for tomorrow. So let me beg off on that. That's a very good question. That's a really good question. Let's see. The new entry point for Microsoft. Yeah. Okay. If you're going to, I think you should take out your half position, and I think it's gonna be a little bit lower if you're selling, if you're kind of selling up from where you entered at 147, which by the way is excellent. By the way, that's a great call. But I'm going to have more on Microsoft. Microsoft's one of my favorite stocks, and hopefully I'll have more on that tomorrow as sort of an idea there, so I can give you a little more information on that. VTI has been up. Wow, that's incredible. I've got to do some. I've got to do some more work on VTIQ, and I will get back to you on that hopefully tomorrow. The TVIX is up 20% today. Okay, our old friend the TVIX. Let me explain what the TVIX is for everyone out there that probably doesn't know what this ETF is. Well, the TVIX is a leveraged ETF that basically that basically runs basically in sympathy with the VIX. The VIX, of course, being kind of the fear index. If there is more fear in the market, the VIX will go up. Now, the TVIX goes up 3 times what the VIX goes up. So it's very, very volatile. So here's the thing about the TVIX. It is the ultimate hot potato. This is not a long-term investment, but if the market is changing, if there is a tremendous upswelling in fear, this is the one to be in. So it's very interesting. Just wanted to share that with other people out there that may not know what the TVIX is. So that's kind of what the TVIX is. Let's see. Okay. How can we see more of you? Wow. I'm surprised anyone wants to see me, to be honest with me. To be honest, I don't know if anyone wants to, but guess what? I'm on I'm on Periscope, and I'm on Netflix, which is pretty, not Netflix. I wish I was on Netflix. I wish I was on, I'm on YouTube, youtube.com/Dallas Trading Floor. Now, I'm going to try, and this is, I haven't done this yet. This is just, I'm just going to try to do this, maybe make a Roku channel, and it would be, not a huge Roku channel like America's Voice or something like that, something really good, but a Roku channel to broadcast stock trading news from the. See, I'm trying to create a channel from the viewpoint of the individual trader, not the institutional guy that has millions of dollars, but the guy that wants to get in, get out, make some money. That's my whole emphasis here, is to do that. So I'm going to try to do a Roku channel as well. Thank you so much for that. I really appreciate it. Jim, today was a tough day for trading for me. Wow, sorry about that. Yeah, I tell you, okay. Here's one thing I know I'm sounding like a broken record out there, but when you're trading long, always set a stop loss. Why? Because literally in this kind of market, you can get up and go to the bathroom, and you can be down 500 points. That's kind of what happened today. Not a good thing. Always set those stop losses. On longs, you want to set the stop loss. I like to set the stop loss at about 7%. So if you buy a stock at $100, set that stop loss for 93% of that. That'll give you a 7% cushion. Now, if you even want more cushion, like I do, because I get these wrong all the time, go out and sell a covered call. Sell a call maybe 1 week or 2 weeks out. Then you can pick up an extra maybe 20, maybe 2 or 3 points. And the beauty of that is, if you're right, if the thing doesn't fall too much, that covered call will expire, and it will give you money, because no matter what, there is what they call the theta decay on the option, and that's a great way to make money, is sell that option, and then if nothing happens, if it does not exercise or it doesn't fall below your stop loss, that option is going to decay and it's going to bring you money. And that's how I make money all the time. If I'm entering a position in a stock, I will typically do that. I'll buy 100 shares, I'll set the stop loss, and then I'll sell a covered call. I'll sell a call out maybe 1 week or 2 weeks, and I'll sell it very close to in the money. And that way, even if I'm wrong, I can make a little bit of money. So that's how I like to enter positions a lot of times. Is it a good time to invest in airlines and Boeing stock? No. No. Please don't do this. Please don't do this. Here's the thing you've got to understand about what an equity is, and this is really a confusion on a lot of people think about. When you're investing in equities, you are at the very bottom of the food chain when it comes to a bankruptcy. If the company were to bankrupt, the equity is the first thing that's taken out. So in a time when a company is very constrained in terms of its in terms of how it is trading, you want to be very careful about being long in an equity position on a stock that has too much debt. And that is the case for Boeing. All the airlines as well. They may actually go out of business. As a matter of fact, I think by the end of the summer, one of the big ones is going to go out of business. What do I mean by one of the big ones? Well, I think that's either going to be American, Delta, or United. Now, I don't think United's going to go out of business, but I think that American may have trouble, and I think Delta may have trouble, and I think other ones may have trouble. I don't know. I don't have a crystal ball, but I do know one thing, is stocks that have too much debt in a deflationary market like we're in have lots of trouble. So we have a deflationary market right now. How do I know that? Because interest rates are almost negative. That is deflation. That is the definition of deflation. It's also a definition of deflation when oil, instead of costing $100 a barrel, costs $20 a barrel, and they have too much of it. That's deflation. So companies when there's deflation in the market like there is now, and the companies have big pumped up balance sheets with lots of debt like Boeing, they're vulnerable. That's why Facebook See, Facebook has no debt. That's why it's a good stock, because it doesn't rely on debt to make money. And that, especially in a deflationary market. Now, if we were in an inflationary market, which we may be towards the end of this, then stocks that have debt are the best places to be. You can't beat them. But right now we have a deflationary economy, and that is very tough. From a long-term perspective. Well, no, here's the thing I think about a long-term perspective in the stock market. John Maynard Keynes said many years ago, and I love this statement because it's so true. I don't agree with him on almost anything, but I do agree with him on this. In the long term, we're all dead. So even with a long-term perspective on this, Boeing and the airlines, I don't think are the place to be. Why not take your money and go to the future? Why not be in a PayPal that has no debt and that is killing my Visa and MasterCard that everybody's going to use? Why not be in that? Why be in a Boeing that, maybe airline travel will come back, maybe it won't. I don't know. But you know what? The whole philosophy is try to figure out where the big boys are going and go there too. You want to be a little minnow. You want to follow along with that whale, and you want to see that minnow. You want to go with that, where that whale's going, see what that whale's eating, and eat a little bit of that too, because that will make you successful. And that's one thing that you have to always think about. Where are the big funds going? Where do I want to be in relation to that? Okay, Market Trader, thanks for this question on Periscope. I really love the fact that I'm getting so many views on Periscope. This Friday, May 15th, options expire. So interesting to see the direction market. Absolutely. Typically, when options expire, for everyone out there, most stocks that have options on them have at least monthly options. These typically expire on the third Friday of every month. Now, there are some weekly options out there that people have, and those are weekly. Those are typically bigger stocks, like the Microsofts of the world. So May 15th is a major options expiration, meaning that the monthly option expires, and so does the weekly option. So it is a double witching. Now, sometimes there are times when they have quarterly options as well. They're quarterly, weekly, and monthly options all expire. That's called a triple witching day. That May 15th is not a triple witching day, but it's a double. So it's going to be very important to see what the direction of the market is. My guess is the market will trend lower. That's typically what happens when you have this happening, because typically there's forced selling into an options expiration because people are trying to unwind their positions. So that's something that you want to take a look at. So, all right. Let me see if I have another one. Okay. Is there money to be made somewhere else? I have DAL from 58. Should I rip? Oh, absolutely. Rip the Band-Aid off now, because it's not going to get any better. I mean, here's the thing, and I know this is hard. This was the thing that always used to kill me when I first started trading. And that was, I would buy a stock thinking, wow, it's such a bargain, it's such a good deal. And then I would buy it, and then the thing would go down, and it would go down, and it would go down, and I'd go like, I can't get rid of it. Can't go out now. Just trust me on this one. 7% down and out. Just, I know it's hard. Rip now, and then buy something that's going to go up, like Datadog or something like that. Buy something, buy the good. The stock market is not like the property market. You don't necessarily want to buy the things that are the cheapest. Why? Because they're cheap usually for a reason, and that is they're going down. So anyways, believe me, everybody makes the same thing. This is why I always recommend stop losses, and I have more than enough bad stories to tell you. So rip now. That would be the thing. May 23rd is May 23rd. I guess you're right. Yeah, I guess it is. So we're going to have a quadruple. That's really interesting. Quadruples can be very interesting because they're kind of like earnings. There's some option plays. And thank you for helping me with my programming, because I may have some option plays for you for the quadrupled witching, because it is a very interesting time when that happens. There's a lot of selling pressure, and if you structure your option trades, and I typically like to do a bear call spread, this can be very, very good, because typically, even a really good stock, if it's coming into quadrupled witching, typically will go down, at least momentarily, and that is a good way to make money when stock goes down, is an options strategy they call the bear call spread. And what this is, and I'll be going over this more probably this week, and what this strategy is basically you are selling you are selling just in the money call, and then you are buying just out of the money call. So if the stock goes down, you win. And this is a way you can do this. It won't cost you anything out of your pocket initially, because it's all on margin. And as I always say, if you sell an option, you're putting money into your pocket. So that's what you ought to look to do. All right, so let's see. All the questions here. Sorry. Oh, I meant March 23rd. Okay, absolutely. Okay, thank you. But I still want to. That's a great idea for a show. Is triple and quadruple witching is really amazing, because everything basically comes all to a head at once, and that can be very advantageous if you do certain strategies on. Next quadruple witching will be in June. Yeah, I think you're right. I have to look at the calendar. I haven't actually put the calendar up yet, but that's definitely true. Yeah, third Friday of June, right? It's because the third Friday, and that's typically where it goes. So let's see. I want to go back to some of my charts here on stock of the day. Stock of the day, isn't that great? Now you can see my ugly mug there, talking about the stock of the day. My stock of the day is Roku, and even when I took this, it had gone down. But I think long term, this is an excellent play. And here's a little chart that I put up on how I would play Roku. Now, currently, I don't have this call on, and I'm kind of waiting to see what the condition of the market is, if I put this call on or not. But in the morning, I put together a little play on this stock that will yield an annual percentage rate of about, if everything goes right, of course, of almost 3%, of almost 300%. This is a 9-day trade, and here's how it works. You buy 100 shares of the stock, and when this slide was made, the stock was selling for $123.70, so that would give you this number, $12,370, which sounds like a lot of money. And I know that sounds like a lot of money, but remember, you can buy this on margin, so you really only need $6,000 in your account to do this trade, believe it or not. If you sell one of these contracts, you will immediately get either $6 a share, $5.55 a share, $5 a share, or so far, so forth. If you multiply that times 100, that's going to give you this number. So in this case, if you were to buy Roku stock, 100 shares, and then sell this call option out here, you could potentially pick up $785, and this is basically in 9 days, which is very good. This is a very good amount of money. I do believe that Roku will move higher. Can you tell all the time? No, but you can tell a lot of the time, and this is a way to do it. So gives you an idea. This gives you 4 strike prices. Buy 100 shares, sell the May call. Now this is going to be the May 22nd call. Okay, it's going to be the May 22nd call, and either at the 125, 126, 127, or 128 strike price. I would do the 128, because that potentially has the potential of giving you 292% return on your money in 9 days. Now, this is per annum. It would be nice if it was in 9 days, it was that much, but this is per annum, 7.2%. But as you can see, the return on the option is stellar, 3.7% in 9 days. That's pretty good. And if you did this, your upside would also be at 3.5%. So very, very good way to trade this Roku stock. So let's see. I have another question here. Royal Caribbean, credit downgrade is junk. No surprise on credit. By the way, there is a tremendous opportunity. Now, people say, God, why would you think that Royal Caribbean is an opportunity? Well, Royal Caribbean is an opportunity to short. Now, what do I mean by shorting? How do you short? Well, you do have to have level 3 capability in your account. That's the first thing you got to have. But if you have that, what you can do is you can actually go, and I use TD Ameritrade, you borrow the shares from the brokerage house. You then sell them, and then you wait for them. They wait for them to decline in value, and then buy them back. And that is a short, and it's very profitable. And it's going to be even more profitable. Today, yeah. Let's see. Let me take another question from TikTok. I was $400 now, Jim. Up. Oh, hey, nice. Let's see. Relative strength basically overbought. Yes, but you still can make good money that way. What do you think of VTIQ will go from here? It was at $35 high. Okay, I don't know. That's a good question. I'm gonna have to. Yeah. There you go. My shorted VTIQ and came out. Yeah. See, sell next week. Yes, I think so. I think you're right. What about the Fed? Are they gonna print some more money? God, who knows? Who knows about the Fed? Isn't this incredible? I do think the Fed is going to do whatever it takes to keep this market going. But here's the problem: if people get too used to this injection of funds, then the merry-go-round's going to stop, and it's like musical chairs. And I think that it might be a bad situation very, very soon, and I think we may be moving significantly lower. But right now, no. What do you think about Alexion and NBIX? I don't know, and unfortunately, Hitachi, my Quotron seems to be on the fritz. But let me see if I can. I don't know. Maybe I can get it up for you. That would be really good. Let's see. Okay, I did. I was bringing this up. So let's see if I can get a actual real quote for you. All right. All right. Well, let's see. It's quoting the NASDAQ pretty good, but let's see if I can quote something else besides that. So let's see. Market activity. Oh goodness, it's just not letting me doing good. Let me see if I can pull the symbol up here. All right. Well, I'm trying. Oh, there we go. Well, let's see. NBIX. NBIX. Let's see if I can get something for you here. My system is very slow. The SQQQ. Be careful on the SQQQ, and I'll tell you why. The SQQQ, for all of you out there that don't know, it is a ETF that basically shorts the NASDAQ 100. You do not want to be shorting the NASDAQ 100 right now, even though it's up a little bit. Why? Because the NASDAQ 100 is the top tech stocks primarily. So I would not be in the SQQQ unless we see a turn in the market. Now, how do we know when there's a turn in the market? The spider, SPY, will start to weaken. When the spider weakens, that's when you want to be in the SQQQ. It is absolutely when you want to be in the SQQQ. All right, so let's see if I can get the biosciences up here to see. What's your take on the SQQQ? I think you've got to be careful on the SQQ. I really do. You might make money on it, but set your stop losses very tight, because it's with the Fed out there. It's just so hard to figure out how it is. So I'd be very careful right now playing the SQQQ. By the way, according to this, currently the stock is overbought. So proceed with caution. I would say proceed with caution on that one. I think it's you have to be a little bit careful in this market because there are so many, there's just so many bear traps out there, that it's a tough way to play. So I would try to stay more with the quality if I can. That's where I'd want to be in the market, is more with the quality stock. So that's why I'm recommending some of my old favorites like Roku and those kind of stocks. I know it's super boring, but those kind of things. Now, another one I think that you might want to look at to watch list at the very minimum is Logitech, because Logitech looks like it's going to break out. It's up $2.37, or about 4.57%. I know this is boring, but look at the volume change on Logitech. 732. This is a quality stock. This is the 50-day moving average here, and it's the relative strength is 93. So, and it's got very, very nice volume increases here. The volume, if you'll notice, is over the 40-day line. That means that institutions are buying Logitech right now. So this is, even in this market where you don't know kind of what's going to happen, this one is definitely a watch list or possibly a buy. So I also wanted to go over 5 very, very strong growth candidates here. Datadog, of course, I was talking about that earlier. Xilinx, this is the colo provider. They provide data center operations. Very, very good business in Nevada. So that's a good one. Shopify, again, I covered that earlier. It's just on fire. If you look at $24 when this slide was taken down, it may be down a little bit from this. My one healthcare stock, LVGO, again, I am starting to get very interested in the healthcare stock because I do think the market is going to reverse, and when it does, healthcare stocks are going to make, there's going to be a lot of movement into them, and they have potential. So see, that's what I think. Instead of fooling around with stocks like Carnival Cruises and Boeing, which are, at one time were great in an inflationary market where everybody's traveling, those are great. Don't buy bargains. Buy stocks ahead of where the institutional money is moving. The institutional money has been moving into tech, and next it's going to move into it's going to move into the healthcare arena. That's the reason why Bristol Myers Squibb (BNY) did so well yesterday. Also, so that's where you kind of want to be looking to be, and this Livongo Health is doing great. Also, an old favorite tech company, Logitech. It hasn't gotten a whole lot of love as of late, but yeah, it's pretty good. It's pretty good when it comes up. So, just wanted to go over that with you for that. So, by the way, I'm putting together a mailing list, and just wanted to put that out there. It's Dallas Trading Floor. This is my phone number. I do actually answer my phone, not when the show is going, of course, but at other times I answer my phone. So if you don't reach me, just leave a message and I'll get back to you. I'm also going to be I'm announcing. I haven't done it yet, but I'm getting ready to go in with a mentoring service, and this will help possibly if you're just starting out or possibly a little bit better trader. Some ideas that have made me money over the years, and I'm going to be starting that. But right now, it's not ready to go. It probably will be a few weeks off in the future. If you could sign up on Dallas Trading Floor, I can alert you when that's going to become available, and it's going to be hopefully a pretty good deal, and we're going to make some money because even though the stock market, here's the thing about the stock market, it goes up, it goes down. It doesn't matter. You can make money in both directions. You can make money absolutely in both directions. So that's what I want to be absolutely clear on. Let's see. Okay. What are some of the shorts you're recommending? Well, there is a short that I'm not short yet in this, and that is Marriott, symbol MAR. Here's the reason I think Marriott is going to not do too well in the next few It's after earnings. They had earnings. They were horrible. Everybody knew that were going to be horrible. But what I'm looking for to short stocks is I'm looking for companies with very high operating leverage. Now, what do I mean by that? What do I mean by high operating leverage? Well, if a company has a lot of debt, that is high operating leverage, meaning that they have to make a lot of money just to service their debt. Now, Marriott right now, according to my calculations, has about 1,417% debt relative to its equity. That is horrible. That is horrible. And what will happen is that they will not be able to meet their debt and they will default on their debt. They won't default on all of their debt because it's in individual hotels. But I don't think they're going to be able to maintain their price at the level they've run. So Marriott is definitely in my sights. And I'm going to hopefully have, by the end of the week, I'm going to have some maybe 5 good shorts. Because I do believe we're coming up on a great time in the market to short stocks, potential of making very, very good returns. Let's see. What was that healthcare stock? Thank you for mentioning that. By the way, if you want to review this, I have all of this, and it will be archived on YouTube. It's just youtube.com/Dallas Trading Floor, and typically about I would say an hour or two after the broadcast ends, it puts it up there. So remember, this is Dallas Trading Floor number 45, and it'll be about 50 minutes into the show. You can just fast forward it. But I wanted to show you this one. The symbol on this, Livongo Health, LVGO is the symbol on this. LVGO, just wanted to get it out there. So that's the healthcare stock that I think is going to do very, very well, just based on a lot of other things. Okay, well, it's almost an hour here. Let's see if I have any more questions. Here we go. Thank you, Market Trader. I always like your questions. The USA and EU can print cash and float their economies. Other economies can't. Global downturn. Absolutely. This is what happens when you have what they call a reserve currency. Have you ever wondered why so many people want to work in the United States and in Europe? It's not because they're in love with the places. It's not even that they can make all that much money. It's the fact that they can earn hard currency. Hard currency which they can't earn in their own countries. For instance, with the value of oil going down, many of the countries in the Middle East won't have the ability to pay their debts because they're all in dollars. And if they're not selling the oil, it's not going to be so good for them. So a lot of their people are going to be forced to move to the West in order that they can make some dollars. That's what happens in Mexico. Because of the Mexican economy is weak, they need to have those dollars. So they come, the people come to the United States to earn those dollars and send them home because a reserve currency like the euro or the dollar, that's what counts. So there's going to be a downturn coming. But what it's going to do is it's going to force a lot of companies to disconnect their economies from the world financial system, which I think might not be such a bad deal because, I mean, why should an Argentina be so dependent on earning dollars when, if they need the more domestic production? That's what will happen. But I do agree with you. I think that a global downturn may be coming, and if it is, man, that's not going to be great. That's not going to be great for anybody. Okay, I talked about the healthcare stock. Okay, great. And for everybody that didn't see it before, if you could join us for our mailing list, I'm going to try to get this thing in order, and hopefully it's not working right now, but hopefully we'll have information coming out on trade alerts, good things to short, that kind of thing, and stuff that's outside of this show, but and also questions. So just log on to www.dallastradingfloor.com, and in the comment section, just leave the information in there, and we'll get to you with the list. And thanks again for everybody for taking a look. I'm on, by the way, so you'll know. I'm trying. Oh, wait a minute. There we go. One last question. Indexes are dropping right now. Yeah, I think we're going to have probably a washout tomorrow. It's probably going to be kind of ugly. So yeah, I think that's true. We're going to have a reversal. We had up till today, we had 6 days up in a row, and I think that it's going to move. It's going to move lower, and I think that's very, very good. That's very good. All right. Well, I'll see you later on TikTok, and if you want to see me, if you want to see all the charts and everything like this, go to www.youtube.com/Dell's Trading Floor. And for everybody on YouTube and Periscope, thanks for joining me. I broadcast every day at 1:30 to 2:30. Dell's Trading Floor.